Alright, so if I went to the comment section in my latest video, it seems like a lot of people are bored with the Bitcoin price and people are kind of complaining. But while you guys were doing that, the Federal Reserve actually printed a bunch of money and is actually bailing out banks. And this is going to be so extremely bullish for the Bitcoin price. And the fact that some of you guys are right now negative means you guys are not locked in and you guys are not paying attention. And in this video, I'm going to pay attention to the fact that the US government has been printing $30 billion and we have the biggest bubble of all time right now happening here with all of these stocks, and that is going to create the most significant, biggest Bitcoin rally you've ever seen. So let's first dive here straight into the first chart that I have here, guys. Watch it until the end because things are about to go absolutely crazy for Bitcoin. So basically, we have this guy here, name is Ali, and he basically posted this chart here saying that does it look like Bitcoin will hit 250,000 US dollar by December? Basically posting over here the MACD right over here that is very close or has almost crossed. And basically, this person is saying like, well, last time that the MACD crossed, we had this big bear market, and look, we're almost crossing. Do you really think that this big Bitcoin bull market is coming? Well, look at this right over here. Basically, what we got over here is I guess I just start here from the first slide here, is that we have this massive wealth inequality in the US. And that is the first thing that I actually want to talk about. My first point here is that if you're right now not in the top percent, you are basically in poverty. Because currently, if you look at this, the top 10% hold 87% of all the stocks. That basically means that all of the stocks are held by very small people here at the top. No, everybody else basically doesn't have any assets besides, you can see real estate. Real estate is generally still held here by people who tend to have a little bit less money. But if you want to kind of go along here, you want to have Bitcoin, you want to have stocks, you want to have the kind of liquid assets that you can actually liquidate whenever you need it, whenever you need to do it in times of an emergency, then you need to hold stocks, you need to hold Bitcoin, but all of them are held by the top 10%. So that's already a major problem. And that's why one of the reasons why you guys have to pay attention is because you want to be in the top percent so you don't end up with illiquid assets that you can't cash out and basically stuck here with debt. And so basically why this is and why we're seeing this big wealth inequality is basically called the quintillion effect. And the quintillion effect basically means that the more that the government prints money, the more that they inject liquidity in the system, the more that the liquidity basically goes to the top and the less the people actually have on the bottom and the more inflation that you of course get. Now, basically, we had, of course, the Federal Reserve that increased their interest rates here about 4 years ago. We saw the big Bitcoin bear market. But currently, it seems like all of these banks are having a massive amount of problems because a lot of these banks, they were kind of forced to hold bonds. These bond yields, they spiked to the upside. That means that these bonds, they were basically in a loss, and a lot of these banks have a massive problem. So I think in total, it was about $500 billion here that the banks had in total losses here all combined together. And what we're basically seeing is that the overnight repo here demanded, and it's spiked it to 30 billion. And basically, this is the, it's basically a bailout. It's basically a kind of a liquidity line that the Federal Reserve provides here for these banks whenever they have problems. But it's basically like a bailout. So in the past, there was this big bailouts in 2008. You had this thing called Occupy Wall Street, where people went on the street and demonstrated against these bailouts. But basically, they learned from that and they changed the name to something called overnight repo, which basically injecting liquidity in the system without calling it a bailout. So that's what we're basically seeing here. So we're seeing that the banks are inside this massive problem. And again, if I go here to the latest video, we had all of these bad comments and people saying that, Bitcoin is so boring, yada, yada. Guys, the Federal Reserve is literally printing. You guys can see that it's increasing right in the last couple of weeks, months. And so this, again, is going to be very bullish for Bitcoin. More liquidity, more inflation is going to be bullish for Bitcoin. So the thing is we are currently kind of inside a crisis here. So we have, again, these banks having big problems. And what this person is saying is that, generally speaking, whenever the market has problems, whenever there is a potential bubble or there's a potential crash coming, you're going to see that people are going to invest in all of these companies over here, which are all just food companies, because people generally need to eat food. So whenever there's a crisis, these companies tend to hold its value pretty well. But you can see that all these companies year to date are down absolutely massively. I mean, the consumer is basically here dead. That's what person is saying. The consumer has died. So what we're basically seeing here is, again, we're seeing all of these consumer type stocks are down. But what we're actually seeing is that these AI companies, they are massively to the upside, and they currently hold about 50% of the total stock market is currently held up here by all of these big companies, as you can see over here, Meta, Alphabet, Amazon, Microsoft, and they are massively increasing because of AI, because people are speculating that this AI thing is going to absolutely blow up and take over the world. The issue is, there's a slight issue with a lot of this stuff, is that, first of all, what you can basically see here is that Amazon and OpenAI have a new partnership, and that's a lot of this AI stuff. Is basically you have these big companies that are paying Nvidia for these GPUs, and that's why Nvidia is such an extremely market cap, because basically they're being paid by these big companies, and these companies are basically paying for these investments into Nvidia through the actual investments that they get from investors that they are putting into the stocks. So people are betting on the fact that AI is going to take over and everything in the world is going to be taken over by AI. There's a big problem. So for example, if you have something like Sora or ChatGPT, now if you pay for ChatGPT, it's only like a couple dollars. Like, it's really not that expensive, but the amount of processing power that it actually takes to have an AI that actually responds to you and generates videos and makes pictures, that is actually a lot more expensive than people are actually paying for it. So I think in terms of revenue, Nvidia, I think OpenAI had something like 15 billion, but a company, for example, like Walmart is still doing more revenue than OpenAI. And OpenAI is still running in a loss. A lot of these AI companies, they're running in a loss because they're paying more for all the AI infrastructure than they actually get from the subscriptions. So it's great that we have all these AI tools and they look absolutely amazing, but I kind of compared it with my friend to, for example, if you have a $100,000 car that's self-driving, that's absolutely amazing that you have a $100,000 car self-driving, but the average person cannot afford that. The average person would probably buy a car that's $5,000 and that would still drive the person from A to B. A $100,000 self-driving car is not something that's actually viable for the average consumer. It's not viable for the mainstream consumer. And if you're going to have a business and you're going to expect that every single person in the world is going to drive this car, it's really not going to work. And that's the same with AI. It's great, it's amazing, but it's too expensive for the average person to actually be able to use. And it's not really an economically viable product, at least at this point in time. And people are speculating, of course, that this thing is going to blow up and that AI is going to take over everything. But I mean, I haven't seen that yet, so let's actually see. It's a big bet that people are doing, but it looks to me like it's a big bubble. Now, why is this so extremely important is, well, what you can see with Warren Buffett is he is selling a lot of his stocks and he's preparing here for a big drawdown here on these stocks. If we're going to have a big drawdown on stocks, what you're going to see is banks are going to have problems. You're going to see all these liquidity problems. The government's going to step in and print money, similar to what we saw in the COVID crisis. The whole market is going to spur up again. And then you're in this limbo to what the hell are you supposed to do anymore? And that's basically what Michael Burry is saying. You guys know him from The Big Short. He was this famous guy that shorted the housing market 2008, made a lot of money. He's saying there's no bubble. He's saying sometimes we see bubbles, sometimes there's nothing we can do about it. Sometimes the only winning move is not to play. Saying there's no stock market anymore. There's no economy anymore. It's all a bunch of speculating based here on free money. And we have no idea how this is actually going to end. And that's what this person also saying. It's like we have all these fake banks, these fake companies which are being held up by fake liquidity. We have basically the working class that's holding up the entire system and they're eating the inflation, and we have no idea how this is going to end. Well, the way how it is going to end is through Bitcoin. So that's why I've been making all these videos for many years. And sometimes Bitcoin is going to be a little bit boring. But sometimes you have to pay attention and you'll always have to be locked in. So we're seeing this also with the bond market. Big bubble. We're seeing that the government expenditure is going to absolutely spiral out of control because the bond markets, they have to lower the rates, they have to increase the liquidity, and they have to pay off these bond debts with money that they print new again. So we have this massive liquidity here that's going to be flowing into the market, and that's all going to be super bullish for Bitcoin. It's not going to be bullish for the economy. It's not going to be bullish for the average person. Understand that. I can sit here and be extremely happy about it, but our society is going to get a big damage from all the speculation that has been going on. But if you want to protect yourself, well, I'm not a financial advisor, but Bitcoin has been the way forward. Now, we can understand that some of the market turmoil is going to be negative for Bitcoin in the short term, and we might see some crashes. But this is looking like a very strong setup for Bitcoin, and that's the exact reason also why gold has been pumping so far to the upside. So let's see, let's pay attention, and let's lock in. Let's not get bored. Make the comments positive. If you made it to the end, let's be positive. Let's like the video, subscribe, and let's see, guys. We will make it here until the end. Of course, I hope to see you guys here in my next video here as well. Bye-bye.